Good morning all and welcome to today's video. So this morning I have four pairs on watch and those are Euro Pound, Aussie CAD, Euro Kiwi and Dollar CAD. So I'm going to break them down for you now, just being patient as some of these potential entries manifest themselves, and I'm going to talk about when we get to the lower time frames why I didn't take I guess you could call it a possible entry on Euro Pound yesterday, because of specific reasons, and those specific reasons caused price to do exactly what I was anticipating it might do. So sometimes you can't always explain. You can explain certain things, but sometimes you look at something and you think, I've seen this multiple times and this just doesn't typically play out. So I've talked about previously how I pattern separate every morning. I just go through various structures from as far back as about 2004. And once you've seen enough structures and patterns play out, sometimes you just look at something and you just think, I've seen this. This just doesn't typically play out. And sure enough, it didn't. So just blueprinting those patterns in my mind each morning just to ensure that I'm unconsciously competent, or that's the goal. Okay, so without further ado, let's break these pairs down for you. So Euro Pound on the higher time frames. I talked yesterday about how we have this kind of near miss here, how this wick near missed this area of value. Okay, and it wicked kind of to it, not through it. And typically speaking, when we kind of near miss an area, we come back up to fill the area and take out the high or the low on the flip side that we near missed too. Okay, but that doesn't always happen straight away. Okay, but I am factoring this in to the bigger picture. And what stands out to me in terms of where price is at the moment is that price tapped into this area of liquidity here, this exchange of liquidity here, and we did so by way of a 1, 2, 3 touch move. Typically speaking, on the higher time frames, we break above an area of value before we're going to move to the downside. On the flip side, we break below a low before we're going to move to the upside, as people typically buy the highs. So when it breaks above here, they believe that this is support. Okay, so they buy the highs and sell the lows, and that is typically what we call catching people the wrong side of the market. Okay, we even have that 1, 2, 3 middle section there. So when we reach this area, I was anticipating this, maybe not with the same level of aggression. We don't always know how aggressively price is going to do something, but I was anticipating this move here. I've talked previously about how the 90% rule, so the start of a piece of structure, is typically where we either reverse or we form deeper corrections. In this instance, we did neither. We just smashed all the way through, suggesting to me that the sellers are well and truly on board and that they're likely holding their positions all the way down. The people who got involved here, they're holding their positions and they will likely be getting out down this area as a first target and potentially a lot lower, but certainly here as a solid first target, where if I was a seller, I'd be looking to get out of the position or potentially get out. Okay, and then as I said previously, we would have that 1, 2, 3. If we move down to that area, we would kind of have this 1, 2, 3 middle section, and then potentially that could be the springboard for a move to the upside to potentially give us this 1, 2. When they're this close together, we kind of see them as one touch, and then that 3. And when we fall just shy of an area that we near missed to last time around, that might be what, typically speaking, price pushes a bit higher to tap into that area, and then potentially we would have this kind of structure. So that's the bigger, the higher time frame picture as I see it. Of course, that looks a bit messy, but that's what we kind of call pattern separating. That's one of the things that I'm doing when I'm pattern separating each morning. So just looking for a simple move from here to here. Okay, we don't need to catch monster moves. We only need to be able to get in, manage our risk, and then get out at a sensible point that gives us a decent profit target. And then that's it, and then move on. Okay, so yesterday you can see this area of value. Price left us with a footprint. Okay, this setup here reminds me of what I used to trade about 3 years ago with very, very little knowledge, and I was actually profitable, literally just trading these kind of setups. So because that's all I knew. I literally just used to trade setups like this, a massive move down on the higher time frames, big sideways correction, and then I would get short within here, and that's all I used to do because I knew nothing else, and I was actually profitable doing that. Admittedly, it was on demo money at the time, not live trading, but nevertheless. So when I saw this yesterday, the thing I asked myself is, we have the area of value, right? We tap into that area and we wick to it and not through it. So what this tells me is that when price tapped into this area here, it didn't find enough liquidity to send it to the downside. So what I'm thinking now is if we tap into that area again, we'll likely not find enough liquidity to move to the downside as well, because if we tapped into it previously and didn't find enough liquidity, then the orders are likely stacked just above this area of value. Okay, not necessarily, because this does still represent a high area of value for a sell, but if we've tapped into it once before and price didn't find enough liquidity to send it to the downside, then it will likely do the same again. Okay, and one of the clues for me, so we had this move down here. Typically speaking, if we're going to impulse to the downside, we don't just see one candle. Usually it's a makeup of more than one candle if we're getting an impulse correction continuation to push lower. And there was other clues. If we just look at this on the 5-minute chart, this correction here, okay, there's a few other little clues. One, we didn't break above, and last time we didn't break above, price did not find enough liquidity to push to the downside. We also have this little hook point there, which price, when we had this consolidation here, price failed to tap into, suggesting the liquidity that was there is still there. We also have this kind of sharp move up, sharp move down, sharp move up. Typically speaking, if we're going to move to the downside, we would get a sharp move up, followed by a more corrective move down, followed by a move up, and then the move down. So that was the other clue that this was not going to commit to the downside. And the other clue was the fact that this was quite big, this was quite a sharp pullback, the whole thing, and quite large relative to this impulse down which had preceded it. Typically speaking, if we're going to move to the downside, we would see something a bit tighter, which is just the banks stacking their orders for the next leg lower, okay? And we didn't see that either. So when we get these prices reaching, we get these large corrections, we miss the hook point, we don't break the high just as we didn't last time around. These are all confidence factors which make me think, if we just zoom out, that made me think that we would likely just tap into these lows, okay, and then push back up aggressively, and that's exactly what happened. This could be starting to get more complex now because, as you can see, we've pushed up, but then we've pushed down again aggressively. This could be forming something a little bit more like this, which might take a bit longer to develop. We may be seeing something like that, which then taps into the area. We finally break the high and then move to the downside, okay? But we shall see. Okay, but regardless, what I'll be looking for today is the following. I'll be looking for price to tap into that area and ideally break just above. And if we do tap into that area again, I think we will likely break above just because we've tapped the area twice and not committed to the downside, suggesting that the orders are sat just above. So if we tap into this area, push down and flag, and then I'll be looking to get short on the break of the flag or within it, and then I'll be able to manage it down to these lows for something in the region of 3%. This is now an expanding pattern, so we have lower lows within the pattern. And one of the reasons we like this, just to touch on it before I move on, is because previously my risk to reward tool was dragged to that low, but now we've created a lower low. It means that if we do tap into this area, push down and flag, then I've potentially got more room to manage this trade down to here than I did when I was looking to manage it to the previous low, if that makes sense. Okay, but I'm going to move on because I've got to speed up a little bit. That is euro pound, and of course, if the higher time frame target plays out, then I have something in the region of about 8.5% down to there, but we shall see. So that is euro pound. We've got economic data coming out of the UK in about just under 2 hours' time. So maybe that'll be the catalyst that sends price up to the area of value. We shall see. So Aussie CAD on the higher time frames. So on the higher time frames, this is quite a simple one. If we just zoom out to the weekly, you can see we have tapped into this low, this significant low, which is even visible on the monthly chart. We tapped into that, broke just below, So we wicked through it, not just to it. So that's a tick in the box. And we have that very solid monthly candle suggesting that the buyers are well and truly in charge and that they will likely be getting out of their positions, the bigger players up here, as a solid first target. Okay, so now all we have to do really is look for entries on the higher time frames. You can already see that impulse correction continuation to push higher, even on the weekly chart. Okay, so we kind of came back, retested all of this volume here. Price came down, retested it, pushed up, and then left a footprint here. Okay, so if we just zoom into the footprint, you can see the footprint was left. Price came down. It near missed to this area of value. So here we tapped the low. Notice we tapped this low before pushing up to the upside. So we had that kind of 1, 2, 3, tap the low, and then pushed up. We have a similar thing going on here. We leave the footprint. We come all the way down. We near miss to it. We may form something like this. This wouldn't surprise me if we push up, tap these sort of areas, push down, and then we kind of have that 1, 2, 3. If that happens, obviously, that will take a little bit longer. But what I'll be looking for today is for price to tap into this area, okay, and then a push up and a flag. And in this instance, I will be looking to, I'll be looking for price to break above this low as well, because if we just zoom in ever so slightly, you do have to factor in the fact that we do have this structure here. Okay, so we have this exchange of liquidity. We kind of near miss to that, and then we kind of have this with the middle section. So if I was to look to, if price broke below here, push back up and flagged just sort of here, this could actually be one piece of its own to push lower. And then what if we're trading into this low, I could be tagged in, tagged out, and then potentially price forms some kind of bear flag to push lower. So if we push above, break back above this high as well, this low as well, rather, then I've kind of mitigated that to some degree. Okay, so if we're back above here and above here, that will give me a lot of confidence that we're pushing long, but we shall see. So a tap into that area, push up on a flag, and then I would look to get long either on the break of the flag or within it. And then I'll be able to manage this up to this high as a first target for something in the region of 10%. So that is Aussie CAD. I'm going to move on to Euro Kiwi. So Euro Kiwi, again, doing a similar thing to the other pairs. This year as a whole has definitely been one for patience, that's for sure. I genuinely don't think I've ever seen fewer opportunities shape up as I have this year, but that's part of trading. You have to be patient, and it helps to have other streams of income as well, because you just don't know how many opportunities, if any, the market is going to present. I don't think I've placed a trade now for nearly 6 weeks, and that's, I'm happy to get involved if the market shapes up, but it just hasn't been doing that. So it is what it is. You have to be patient. Right. So we have this kind of 1, 2, 3. We have that exchange of liquidity there. That 1, 2, 3. We tap into the area. We have the middle section, giving me a clue that this is a completed piece of structure. Okay. So there's no reason for price to push all the way up to here. We then have this high here. We come all the way round. We near miss to it. We finally tap the high, push down. So there's no reason for price to tap into this area anymore. Okay. So just looking for a move, we just zoom out to the monthly. If the bigger players, the sellers, are involved now, where do you think they're getting out? I would suggest that they will likely be getting out here. Okay, I'm just seeing this is consolidation, collecting the orders. We break above, break back down. They'll be getting out around here, or potentially all the way down here, because we have a near miss to that area there. Okay, we are trading into this low, and that is one of the reasons why this is lower down on my list. But I'm just seeing this as a kind of profit taking area, and potentially the retest of this fairly shallow, it has to be said, head and shoulders pattern. You have to remember price has no reason to come back here because it's already tapped out the orders. So I'm just kind of seeing this as the neckline of this left shoulder, head, right shoulder, and kind of retesting that volume, but a little bit of profit taking here for that next leg lower. So that means all we have to do is look for entries on the lower time frames. And you can see, if I just zoom down, This will probably be better on the 1 hour chart. I'm just going to, because I've got to speed up. We have a completed piece of structure here. So just separating the patterns. We near miss to that high. We have that kind of 1, 2, 3 middle section. We break above the high. We retest this low here, push down. Price leaves a footprint, okay? We near miss to this footprint here. Notice that. Okay, so that gives me a clue that the liquidity is sat at this footprint there. Okay, and notice that we kind of near missed to that area again. Again, this may not be ready by the end of the day. It's looking like it may not be ready. But what I'll be looking for again, say this year has just been about waiting, because there's been very, very little at all shape up. So it's just literally just been about waiting. And if it doesn't shape up, it doesn't shape up. You need many, many streams of income to supplement your life if you're going to look to trade, because it's so unpredictable in terms of whether it'll provide entries or not. But what I'll be looking for is price to tap into this area of value, push down and flag, and then I'll be looking to get short on the break of the flag or within it. And I'm going to speed up now just so I can get the last pair done in time. So dollar CAD, let's have a look. Dollar CAD, similar sort of thing. We kind of near missed to this high here, but we did tap into that high. And you can see that the sellers are well and truly in charge. And I would suggest, if we zoom out to the monthly, that they will be getting out of their positions around this area, and then potentially price pushes up to take out this high, which we wicked to and kind of near missed to last time around. And then we would have that kind of 1, 2, 3, and almost to some extent this structure here. So that makes sense contextually as well. This is slightly lower down on my list simply because we near missed to that high. But you can see, and because of the sequence of these sharp pullbacks, and because of the fact that if we just zoom down, you can see that price left a footprint here, kind of retesting all of this volume. Okay, and because of the fact that this could turn into something like that before breaking the high and then pushing down. Because of that, this is slightly lower down on my list. And again, this may not be ready by the end of the day. It likely won't be, but if that's the case, fine. I'm not bothered. I'm not looking to get rich quick. I'm just looking to do what seems to have worked in when I pattern separated. You know, what it does in a live market environment is a completely different thing, but we can't know what's going to happen. We can only know what we've seen in the past. So what I'll be looking for today is, you notice we near missed to the area of value. We do have this, so there was no reason for price to come up to here, because this was kind of a completed piece of structure. Okay, we tapped into that high, which we wicked to. We did wick slightly through it, but we had this completed piece of structure. But then price pushed all the way up, suggesting that it was looking to tap into this area. We near missed to it, so I'll be looking for price to tap into that area, give us this kind of structure. Okay, we would then have that 1, 2, 3 middle section. Notice we seem to be filling these wicks. We may break just below, push back up, and then tap into the area, push down and flag. And if we do, then I will be looking to get short on the break of the flag or within it. I will not be looking for a risk entry from the top, just because of how all these sharp pullbacks in the sequence. This is an atypical sequence. And even if we pushed just down to this area here, I'll be able to manage this for something in the region of 5%. But we shall see. As I've said, trading is largely about patience. You really do need the patience of a saint to be a trader. And that's something I learned to do. And that, I would say, is my number one strength. But regardless, I hope you've enjoyed this video. As I say, this is not a signal service. I've noticed things in my YouTube analytics which make it clear to me that many people are using these videos as a signal service. And one of the reasons I know that is because the search terms are never how to trade or how to trade Forex or anything like that. The search terms are always, and I mean literally always, pairs. So people are searching for euro pound, euro dollar. They're actually not looking to learn how to trade. They're seeing things at areas of value and thinking, oh, price is at an area of value. Let me quickly just go on YouTube to see what I'm supposed to do. That's gambling. Okay, you're trying to gamble with someone else's strategy that you don't understand, as opposed to actually trying to learn to trade. That's not how you make money in this game, folks. So don't treat this as a signal service. Thanks for watching, folks. I'll see you in the next video. Have a great day.